We had a lot to discuss here today. We'll start off with markets, which are weak again to wind up a volatile few sessions for the equity markets here today. Crude oil jumping another 10% today, up 32% on the week. We're hitting levels that we haven't seen since late 2023. Crude oil did hit a high above $89 a barrel for West Texas crude. So that's putting a lot of pressure on equity markets at this point. You've seen yields, the 10-year yield rise also. We're at 4.17% today. We've jumped over 23 basis points just this week. So while it might seem like a low level as far as yields go, the velocity of the move this week is kind of reflective of the pain that we're seeing in the equity markets also. So you're going to keep an eye on those yields and keep an eye on crude oil because that's been dictating what's been going on in the equity markets. Big data point today. The non-farm payrolls number for February came in far below expectations. The street was anticipating gains of about 55,000 jobs added in February. We came in at minus 92,000. Big miss there. We had some downward revisions in December that went from a positive number to negative, and then a slight revision lower of about 4,000 in January from 130,000 down to about 126,000. So we've seen some seasonality in some of these numbers. We had some strike-induced criteria that kind of went into the jobs number, but these are seasonal numbers. You've got to take this over maybe a 3 to 6 month stretch to get some clarity as far as trends go, but this is definitely not a good number. The unemployment rate ticked up to 4.4%, historically a relatively low number. But the equity market not liking a lot of this data points that come out. One of the key things and key takeaways is that initially bonds caught a bid and we saw yields come in. That's now reversed. Now, what is the Fed going to look at with their dual mandate? Are they going to focus more on the inflation, which is going to probably rise due to those energy numbers skyrocketing to the upside? Or are they going to focus more on the jobs market, which has been deteriorating a little bit? But a lot to uncover here. Watch the headline risks, watch crude oil, and watch yields heading into the weekend and into next week. Volatility remains. The VIX is sitting above the 25 level. Uncertainty is rampant out there in the equity markets.